Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So the S&P 500 has been in a slow grind for the past couple of months actually. We have made a all-time high here for the S&P 500. The previous all-time high was right here and right here at around the $3,000 level. And this is actually quite an impulsive move on the weekly chart, so that's always good to see on breakouts. At least on the stock market, I like to see an impulsive breakout on the weekly chart. Obviously, this is the daily chart, but you can see this is the weekly chart, and it is a pretty impulsive breakout out of this $3,000 level. Now today we actually are printing a red candle, the biggest red candle we've seen in a while, and we're actually breaking the trend line support that we've made for the past couple of months. So what does this mean for the S&P 500? Does this mean that we've actually peaked? Are we going to see a full-on stock market crash from now on? Or is this going to be the beginning of a small correction all the way back to the all-time high level to then reverse instead of again a full stock market crash like a lot of people are suggesting on the internet? Now I'm first going to cover the daily chart, what I see on the indicators, and then I'm going to go ahead to the weekly chart to see a potential longer term view, and I also saw some interesting potential outcomes on the weekly chart. So on the MACD, on the daily chart, we're currently making a bearish crossover, which is never good news for the bulls. The blue line is crossing down on the red one. You can see the last time that happened, we had a small correction back down. Same thing here, small correction again here, and so on. So this is definitely, I think, a pretty likely beginning to a correction back down to at least this level, this all-time high level, and then we'll see how the markets react. Usually, when everybody looks at the same level, and I can tell you for a fact everyone is looking at the same $3,030 level, well, usually the markets don't do exactly what you expect them to do. They usually reverse just shy or undercut just below and then reverse just to burn some stops, make a little bit of extra money for those big institutions that are trading the S&P 500. So keep that in mind when trading the S&P 500. You're never gonna actually reverse off the exact same same resistance or support level. It does happen, but chances are it won't happen. Now, still on the MACD, we are above the zero line on the MACD. If you watch the videos on my channel, you'll know that's something I like to look at. We are above the zero line, and we're likely going to backtest the zero line. And this line actually acts as support and resistance. Support from when tested from above, and you can see that's exactly what happened here. We had the correction, we had the bearish crossover, the blue line crossed the red one, and then the MACD back tested the zero line, and we actually had a reversal off of that, off of the support level and off of the zero line, and that's what sparked this nice rally all the way up to the all-time highs that we've seen recently. So now the question is, are we going to simply backtest again and resume the uptrend, or are we going to perhaps plunge lower than the zero line and plunge into a downtrend and a potential again more damaging correction or a stock market crash for 2019 or 2020, more likely in 2020 now. Now, one thing is sure is that we still have the MACD divergence on the daily chart. So you can see that we're making a series of higher highs on the MACD here, and the on the price chart and on the MACD we're making a series of lower highs, which is typical divergence action. You know, the price continues on whilst the momentum is actually not keeping up, and that actually is usually a sign of a potential reversal coming. And on the weekly chart, it doesn't have very long-term implications. It usually does have longer-term implications on the weekly and monthly chart, but on the daily, I'd say we're likely going to correct all the way back to the all-time highs level, potentially maybe a little lower, and definitely have a period of sideways price action. So when divergences happen, you tend to either have a big drop or a period of sideways price action. In either case, it is not a very good idea to be long on the markets. I see very limited upside in the S&P 500 right now, but I do see a lot of potential to the downside. Again, my first and minimum target is the all-time high level here, and then we'll see as we break the levels down. If we do start to break below this $3,000 level, which I think the odds are pretty high, well, the selling will get more and more impulsive, and will definitely reach these two price targets in no time, if, again, if and only if we break down this $3,000 level. Now, the RSI is actually coming off overbought, which is, again, a pretty good sign that we're going to have a correction in the next few days or few weeks, in association with the MACD divergence that we're seeing with a overbought reading on the RSI. Again, I see a very likely correction down to this minimum target. Now, I want to talk about the weekly chart, and this is where we're going to actually see the longer term implications of the technical analysis. So I'm going to delete this line right here. And what I've seen recently is the potential for a potential bearish engulfing candle on the weekly chart, and that is actually very dangerous. It could lead to a very impulsive correction on the weekly chart. And what I mean by this is a red candle that would engulf the previous green candle, so be come all the way down here. If by Friday we've engulfed the previous 2 or 3 green candles, well, that would be considered as a bearish engulfing candle, and could have longer term implications if we continue going down from there. Now, considering that we are Monday and that we've already made a nice retracement of the gains that we made in the past couple of months, well, by Friday, if we start going down more impulsively, if we go back down to the all-time highs level, like I said, it is very likely that we do. That would definitely print a nice bearish engulfing candle, and would have, again, much more long-term implications on the weekly chart, and could definitely spark a flash stock market crash in the next few months. So I'm going to show you what a bearish engulfing candle looks like. This is what it looks like. Pretty much the same type of grind up, and a big red candle printed that engulfs the previous ones, and then you can see that the trend is reversed, and a lot of profit is to be made to the downside. Now obviously this is not 100%, and nothing I say in my videos is 100%. We haven't printed the red candle, and anything can be reversed by Friday. So we can, if we start to reverse before Friday, well, that will obviously not happen, and nothing that I said will be true. But it is definitely a possibility, considering the divergence I see on the daily chart. On the hourly chart, there is also divergence. Everything points to a correction in this coming week, and a quick impulsive correction in this week could actually damage the charts for a bearish case in the long term. So I hope what I said makes sense. If you enjoyed the video, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading, and see you next time.